Hello, everyone, and welcome to the Market Daily with Investing Angles. Today, we will discuss the major US indices. Then we'll touch point on the volatility index wicks, and also we will discuss the large the large cap stocks. The main focus today is the candles, the daily candles, the perspectives for the weekly and the monthly ones. And then we'll discuss the long-term perspective for SP 500 from the point of view of Elliott waves. So let's get started. The first chart, these are the daily candles that were formed by indices today. So we are using indices ETFs for better representation. As you can see, all of the candles are the red ones, and well, they are aligned with the price. So we have a big volatility, uh, big trading ranges for all the candles. But technically, they are sitting at the same level that was set on Monday. So that we can say that they are moving horizontally. In general, the formations are viewed as a consolidation before moving lower. Uh, if we look, for example, at IWM, it's not very healthy, and it looks like a falling three methods close to this formation. The expectation is that the index would go lower. All right, so the trends are technically bearish, and we see that the price for all indices are moving below the 8-day exponential moving averages. And what I would like to note, this has happened so far only in Russell. So this formation here, so we can see that 50 and 100 days moving averages crossed the 200-day moving average line, which is the red one. And these are not the healthy signs. Some people call them the death cross. All right, so this is the daily one, and let's have a look what we're going to have for the weekly ones. Well, the weekly are not looking healthy for now. However, there is a chance for them to form a dojis, which would give us approximately 50% chance for moving into either direction. Well, so far these are looking bearish, except for DowJones probably. But again, tomorrow would be a critical day. From the perspective of the monthly candles, well, we have a very strong bearish candles here, and I don't know what needs to happen in order to save this. Let's say let's measure, for example, for the Russell would need to go higher about 9% from the current level in order to save this bearish, extremely bearish monthly candle. Obviously, this is not feasible in the next 2 trading days unless a miracle happens. Well, that's a perspective for the candles, and well, we are anticipating the worst in this case because bearish candles cannot be overturned in the remaining 2 days. So let's move to the next chart. This is our long-term chart. This was updated in September, and we still maintain it. So the most probable from our perspective paths we can align here, and we are expecting after this monthly candle, we are expecting that the SP 500 would lose up to 20, perhaps up to 33% in the following weeks or probably months. Well, that's the bearish chart, and let's have a look what we have on a lower, on a smaller charts. Well, we are thinking that the wave A, the big wave A of the top, it's completed here. Wave A, I'm talking about purple counts. And if this is so, then we should expect wave B work horizontally or maybe slightly upwards for a sizable amount of time. Perhaps it can take a couple of weeks. In general, waves B tend to be longer than the waves A, and well, wave A took us over a month to develop, so we should say that February could be somewhat similar months for wave B. All right, so and we treat the purple as our primary scenario. So if the next one, the next scenario is the red one, if the wave makes 5 waver down, well, that would be a tragic development, I would say, and in this case, we would be sure that the index, after a certain retrace, it would go further down. All right, so and the last for SP 500, this is our bullish projection. If we have a recovery on the weekly candle, let's say tomorrow, well, the only day remaining, and there is a chance, well, then in this case, we can say that there are two perspectives. One is the straight motive wave towards the blue rectangle towards 5,000, 4,800, and or this could be a bigger flat for wave 4 in as shown here in red. All right, so this has been SP, and let's move on to see what the volatility is saying. Well, we have a very good candle today, a very bearish formation, though this is a dark cloud cover, and we have it is a healthy bearish reversal if it is confirmed tomorrow. And generally, we have a support from indicators, and there is a good chance that that the volatility goes down tomorrow. If it is confirmed, then we might have a week or so of bearish development. And well, speaking from the weekly candle perspective, well, it can turn both ways. So far, it is green, but it can develop red, so it's not that far from that level. The concerning part is that this I circled here, that the PSR indicator flipped bearish, and this is not a healthy sign. There is a chance we are still seeing the chance that index would go higher in the foreseeable future. And in the end, I would like to touch point on some large market players. So we can see that technically everyone made a rather strong bearish formation. So the NVDA probably the worst one. They make a combo that is very close to falling 3 methods, and well, it is expected to go down. Tesla here in the corner. Well, it's a very strong bearish Maribozu, and the expectation is to go lower from here. Surprisingly, Alphabet might not be as bad, but again, tomorrow we will see confirmation in either way. Apple, Facebook, Amazon, everyone is moving horizontally as if they're uh, developing some sort of foundation for jump. There is a possibility, and the ExxonMobil, well, that's they have a advanced block formation, and there is a chance of a retrace. Well, I cannot say a reversal, but retrace for sure. And speaking about the weekly candles for the same companies, well, the weekly candles are somewhat optimistic, I would say, and there is a chance for them to turn bullish, at least for a couple of weeks. Though the technical uh, technical indicators are not supporting the move up, but again, tomorrow can change everything, and we'll have to evaluate. So if you are interested, please tune up for our a weekly market update that will be done tomorrow. And before I summarize, if you like the content, uh, please like us and subscribe for our channel. We are trying to do the things regularly. And the summary, the smaller frame candles show some signs of consolidation and a possible rally for major indices and large market players. And I would like to emphasize a possible rally. The volatility index candles printed a quite strong bearish combo. If there is a strong uh, decline tomorrow, there is a chance that the weekly candles flip bearish there. However, the monthly candles are strong bearish, and it would be impossible to turn them bullish. Nasdaq or Russell, for example, would need to rally about 8 to 10% in the remaining 2 days, which is obviously impossible. Overall, we believe that this is a consolidation before moving lower in February, possibly a minor bounce. The long-term charts with targets for SP 500 and Russell were posted in the blog, and you can review them there. All right, and one more thing I would like to say, that we are seeing the possibility of for the indices to lose 20 to 30% of their capitalization. All right, this is it. Thank you very much for watching and listening, and have a great day and a profitable week. Thank you and goodbye.